Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update. Yesterday, the market sold off, not just crypto, but more broadly, and the bond market particularly, and I think that's ultimately what transpired in the markets, and we'll explain why that is. Jerome Powell came out yesterday and lowered interest rates by 25 basis points, which is 0.25%, and ultimately that's a good thing. Certainly for liquidity based on the back end of the dollar demanding a lower interest rate, so less money being funneled back into the kind of dollar and debt-based markets, and the cost of the dollar itself coming down. However, that was just the rate that the Fed set, the rate the free market sets through the bond market, because they announced they weren't going to support the bond market, or they were going to continue their QT, they're rolling off of the balance sheet, which has a lot to do with global liquidity. Bonds went down, yields went up, Dixie went up, and that ultimately leaned on the market. So we'll try and explain that in as layman's terms as possible. It's very important to keep an eye on the big picture because there's like an ecosystem with markets or a food chain, and crypto is still very much at the bottom of it, but climbing its way up. In fact, if you look at some of, or if you look at BlackRock, for example, they're seeing far more interest in regards to their Bitcoin ETFs than their gold ETFs. And I think Bitcoin is going to increasingly eat gold's market share as a digital version of gold. It's not, in my opinion, a peer-to-peer currency as Satoshi had originally laid out. So that's what we're going to cover. We'll look at the markets. We'll also look at Jerome Powell talking about Bitcoin specifically. But to kick things off, let's just get into yesterday's event. So the Fed lowered interest rates by 0.25 point. BOE, by the way, today, Bank of England left their rates where they were. It was very much a split decision on this. There's a lot going on with the gilts market. I was looking at a Liz Truss. I didn't actually mind Liz Truss, to be honest. I thought they were a bit bold with that budget. But I didn't really mind Liz Truss too much. And she was looking at the gilts market and saying, actually, cost of borrowing's really gone up because bonds have gone down. The yields on those bonds, it's like a self-regulating mechanism. And that is largely what took place yesterday. So despite them lowering interest rates, it's my opinion that lowering interest rates are a Fed pivot that has often been termed as a bearish thing. This chart down here shows the last couple of times they've done it. They've lowered interest rates. It's typically led into a bit of a crash. But actually, if you look at a more longer dated version, and this is represented through the lens of Schwab's research, the past, I think, 14 times they've lowered interest rates, 12 of those times a year later, the S&P had been up significantly. It was only 2 times, being 2020. Not 2020, sorry. The 2000s and 2008 on the back end of obviously the dot-com crash and the financial crisis in 2008 where Bitcoin spawned out of, just perfectly to show up as the old system was dying to carry us on to a new one. BlackRock, we looked at it yesterday, very much signaling all of that. So them lowering interest rates generally is a good thing. It takes out the cost of the dollar. And ultimately, the cheaper the dollar is, the more it's going to be borrowed theoretically and pumped into the economy markets predominantly more generally. If you can borrow the dollar, and this is what happened with the Japanese yen carry trade. I think they're actually set to up interest rates this week also. Yen, 0% interest rates, people are going to borrow that and put it into something that's going to yield a higher return. And that's a similar thing that goes on with all currencies, really. And that's why we've seen a lot of what we have seen. So they did lower interest rates. They also signaled fewer interest rates. They're looking at a neutral rate of around about 3%. I think today we're at sort of 4.25%. And ultimately, this was good news, but it translated into bad news because what they said also was that they weren't going to stop the runoff of their balance sheet, which is very much a bid under the bond market that has been there that's no longer there. And that saw bonds essentially come down, and this is pre-market, which spiked yields, which ultimately, this is the 10-year US government bond yield, is very correlated with the dollar because, okay, yields have gone up. That means you need more dollars to pay off the colossal debt that's out there. And that transpired in markets, essentially, we'll just stick the S&P 500 on, doing the opposite. So this is the causation, and you can see this represented through the lens of bonds, the dollar, and the S&P 500. Risk generally took a bit of a tumble on the back end of all of this. I think that's broadly what essentially went on. However, I think when we look at crypto and its reaction, I mean, Bitcoin at one point, I was doing a meeting with the Patreons at the time, did sell off a little bit, but not really in the grand scheme of things by any kind of serious magnitude. And this is why we consistently focus on the bigger picture. I don't want for you guys to have the heartache of paying attention to the smaller time frames and every move that happens in the cryptocurrency space, and they're often volatile, getting very sucked into that and very kind of emotional on the back end of it. Focus on the bigger picture. We've done lots of technical work. We've certainly looked at 5 technical reasons alone, and there's more to be bullish on Bitcoin and expecting its continuation, let alone all of the work that we've done on the markets generally. So with Jerome Powell lowering interest rates, it's a great thing. It lowers the cost of borrowing from a federal level, and that really sets it for banks then. However, the announcement that they weren't going to reduce the rolling off of their balance sheet means they're not supporting the bond market, which means it's sold off. Ultimately, that spiked yields, which spiked the Dixie, the dollar, because you're going to need more dollars to service all that debt. It takes liquidity away. And that ultimately leaned on markets. And that's why we saw, despite on good news, the reaction that we got yesterday. Sounds very complex, but it's really not that complex at all. And in crypto, what you have is a lot of people that haven't learned their lesson yet in regards to playing with leverage and getting leverage long that just get wiped out and kind of amplify the crash. And certainly when Bitcoin starts to roll, the market does more broadly. But the cryptocurrency space, in my opinion, is in such a great sort of... It's just beautiful what we're seeing with crypto. I mean, it truly is... This is the total cryptocurrency market cap excluding Bitcoin and Ethereum. This is just excluding Bitcoin, and this is the total market cap. And I've ultimately done a lot of work on a lot of different things, looking at how high I think this space can go, and based on USDT dominance and Bitcoin dominance and where I think the price of Bitcoin is going, you're certainly, in my opinion, going to get over that $10 trillion mark. Today, we sit at 3.5, so there's at least a 3x in terms of overall market cap. And then I think you're actually largely going to overperform that and see further continuation to the upside. I couldn't be more positive on the direction that this space is going in a whole and the kind of fundamental changes that it's bringing to the world. And we still have to contend with the value system that we currently have in place, which is one... And talking about value systems and the kind of transition to a new value system, I want to pull up something that the Market Sniper spoke about. I wrote a tweet on it, and where he spoke about actually what's going on here in regards to a kind of global reset. This is the first image that he shared in his video. This is the current sort of currency markets, UK gilt markets, the large markets of the value system that we use, which we have to contend with whilst it's still a system. He essentially then showed how some of this value is going to escape into gold and silver. I'm a little bit less optimistic on gold and silver, but certainly Bitcoin and the altcoin sector, which is going to be the new system that things are going to be tokenized on. And then the progression of this gets smaller, these get larger, to eventually a totally deflated system, to eventually, this essentially taking place and everything being sort of captured on the blockchain and it worth quadrillions in terms of overall value that lives in our space. I thought that was very interesting. I want to share that quickly, but we still do have to contend with the traditional financial systems. It's very explainable with what took place with the bond markets yesterday, what that meant for yields, what that means for the currency. Strong currency, if you think about the trade, I mean, we look at the SPY versus the US dollar, Bitcoin versus the US dollar, Hedera versus the US dollar. US dollar's getting that bid on the back end of what we just spoke about. Well, that's going to lean on the markets. And ultimately, I think this is just a blip in the road of what is a longer trajectory. And that's why we focus on the broader timeframes. Jerome Powell, very interestingly, actually yesterday, did mention Bitcoin. And I want to play this clip. I actually... yesterday interviewed the CEO of the second largest Bitcoin mining company, period. And I will be releasing that interview likely next week. But what I want to do is play what Jerome Powell also had to say in his sort of minutes, his press conference after, as it relates to Bitcoin. So I'm going to go ahead and mute my mic. We're going to get into this and then we'll conclude the video.
Assets that have been buoyant. Do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
Very interesting. So I think we're a while off the Fed owning Bitcoin, but certainly a strategic reserve we know is around the corner. I also listened to a interview with Trump, and he actually said he wasn't going to get rid of Jerome Powell. He said he'd probably keep him there because the interview, of course, as they typically like to do, like to poke, and they were saying, oh, well, Jerome Powell said he's not going to leave if you ask him to, and he said he'll leave if I ask him to, but he's not going to. And, you know, I think Jerome Powell's a very interesting character. He's a central banker, so that really says it all for me, but I think we've seen a lot worse, and I think they're being very cautious. So yesterday's sort of events had everything to do with greater markets, just leaning on crypto, really the debt markets and ultimately the yield markets, affecting the currency markets, which of course affects the crypto space, but markets more broadly. I mean, if we take a look at the S&P, for example, you know, this really sold off. But we've got higher targets for the S&P that we think it's going to get to. Tesla was one of ours that is very close to making our target, by the way. And we gave this target a doubling for Tesla when it was in the $200 range. Subscribe to the channel, guys. We do talk about macro markets. If you want to take it a step further, become a Patreon. We've got a stock at the moment that we're just aping into in a measured approach. And Amazon's also another one that I think is getting very close to our target since we gave it. So stock market's still in very good standing, in my opinion. So is Bitcoin. You know, they're both going in the same direction. We can cross-analyze those markets and go a little bit further. I think this was just a kind of an announcement, a readjustment, and ultimately, you know, we're ready for that continuation today, I think. I don't see any sort of real issues. There are some things around the world, like the Korean won, that I'm looking at. Something bad is, I think, going to happen with the Korean currency, South Korean currency, and there's likely going to be an event off of all of that. There is some interesting stuff as it relates to XRP that we've covered previously that could be coming into effect there. Certainly the dollarizing of South Korea. But I'm going to love and leave you on that note, guys. We're getting way too into a whole different basket of subjects. Yesterday, market sold off. Why do they sell off? Jerome Powell lowered interest rates, great thing. But what happened was they announced that they weren't essentially going to step into the bond market. That meant that bonds sold off, which meant yields went up, which means that the currency went up. And ultimately that leaned on the markets. And that's the real way of looking at things. Sometimes the answers aren't always in our space. You know, you can look at things like liquidations and things, but that's largely happened on the back end of markets more broadly selling off. But when you look at them, big time frame view, we're still in good standings. I'm going to love and leave you on that note, guys. Thanks for watching. See you all in the next one.